So today I wanted to share with you the concept of marginal gains, which is a concept I learned in a finance class, but now use in my day-to-day life. And while I was thinking about this and while I was thinking about what I wanted to share with you, I got to thinking that there are lots of finance terms that I actually end up using in my day-to-day life and that I think that everyone should know and everyone should utilize more. So without further ado, let's break down what marginal gains is. Marginal gains is a principle rooted in making small incremental improvements in processes or behaviors that can make a large overall improvement in the output. Now let's break down how that can impact you in your personal finance and in your day-to-day life. Some practical examples that involve marginal gains in your personal finance may look like you understanding that you could possibly contribute $100 more each month into your retirement account. Now that $100 a month of additional contribution is going to compound over the years into hundreds of thousands of dollars by retirement. But let's say that $100 is all that you can afford right now to invest additionally each month. If you were to invest $200 each month additionally into your retirement account, you would have to make sacrifices in other places in your life. While you'll still see the same amount of gains in the future from that increment of an additional $100, you'll see less marginal gains because you'll be required to make more sacrifice in the present. Where that first $100 of additional contribution, you won't be forced to make that sacrifice. Therefore, there's a higher marginal gain in that first $100 that you can contribute. And that's an important concept to understand. Outside of a structured setting like business or finance, how could marginal gains apply to your everyday life? Well, that concept of making small adjustments to the input to create massive changes in the output can apply to nearly everything in your life. A simple example may look like trading that cereal that you have for breakfast each morning for something else that you like, such as eggs or a protein smoothie. While that may take a little bit more time to prepare for yourself, you may see a massive output because you're having fewer calories, you're having more protein, and you're better fueling yourself for success. Whereas, let's say that you try to change that chicken breast that you have for dinner each night in for canned tuna. While the macros of canned tuna might be better than chicken breast, you're not going to enjoy it, you're going to be living a lower quality of life because of it, and it's probably not worth it to you because the amount of sacrifice that you have to make in order for the small amount of gains from it is probably not worth it. Another example of marginal gains in your personal life may look like paying an additional $20 for your gym membership. Let's say your original gym membership was $30 and you had to drive 10 miles to the gym. And this $50 gym membership is just around the corner from your house. Well, since it's so much closer, you may end up going to the gym more frequently, which means that you'll hit your goal sooner. That $20 increase in investment may be the difference between you not hitting your goals and hitting your goals in the gym. Imagine that instead of spending that $50 for the gym that's right around the corner, you go and find the nicest private gym in your area. That's $150 a month. Well, are you going to see 3 times the results as you would from that $50 gym? Probably not. So there's a lower marginal gain for that nicer gym. The second concept I want to break down today is ROI, or return on investment. It's often expressed as a percentage and provides insight into how well your investment performs relative to its cost. ROI can relate to your personal or professional development. Let's say that you take an online course that costs you $500. Well, that course may allow you to charge $250 more per project for your personal freelance job. And that's a massive return because you'll make your money back in just 2 jobs that you take. ROI can also be used in time management. Let's say that it takes you 6 hours each week to clean the house. That's 6 hours that you could be spending with your kids if you were to pay a couple $100 to a housekeeper to come and do that cleaning for you. And so for you, it could be worth it to hire that housekeeper to buy back your own time. ROI can even apply to your social life and your relationships. And instead of seeing yourself as spending $300 to go on a trip with your friends and to build these lifelong memories, seeing that as an investment into building those memories, into keeping those friends, into relaxation, and into stronger relationships. Because that's a crucial part to your life and to your wellness. Concept number 3 is opportunity cost. Opportunity cost refers to the next best thing given up when making a decision. An ultra simple example of this is giving up 3 hours of study time to watch a movie. The opportunity cost is those 3 hours that could have been used to study and get a better grade on that test. An example for your personal finance would be putting some money in a high yield saving account rather than investing it. The opportunity cost would be the potential higher gains that you could see from investing in stocks. Concept number 4 is diversification. This refers to spreading out investments over a broader field in order to mitigate risk and increase your safety of investments. Balance is very important in your personal life in order to mitigate risk. An example of this could be building a diverse skill set so that you have more job security, or you add more value to the job that you're already working in so that you're more important to the company and can possibly get raises in the future. Concept number 5 is leverage. Leverage is using borrowed capital in order to increase your returns. And while in finance, that capital refers to money. In your personal life, that capital can refer to tools, knowledge, or networks that can better your outcome. A super simple example of this is leveraging your connections in order to find a job that you enjoy more or that pays you better. Concept number 6 is liquidity. Liquidity refers to the ability to change your assets into cash, but its broader use could refer to your flexibility or adaptability in different situations. Some people may have a need or desire to have a more liquid schedule. They need that ability to be adaptable because there's uncertainties in their life. Say they have kids that they may need to pick up from practice, or say they have a dog that they may need to come home to feed. Liquidity can refer to a lot more than just cash. And the final term, number 7, is credit, which refers to your trustworthiness as a borrower. While building credit or building a reputation is important in all aspects of life, not just finances. Just like your credit score, your reputation isn't built overnight. It takes years to build that trust. Having good personal credit will dramatically build your relationships stronger and allow you to have more flexibility and freedom with emergencies that may come up. It can also give you more opportunities to move upward in your career, whether that's your boss trusting you more and giving you more opportunities to become a leader. It can also look like your reputation being shared with others, and others becoming more faithful in you because you already have a reputation with other people they've spoken with. Personal credit is an amazing thing to build and takes time. Thank you so much for sticking to the end. All these terms are great to use in your personal life and great to understand because they relate to everyone, whether they know it or not. If you have any terms that you use in your daily life, please drop them in the comments. I'd love to hear them. We'll see you in the next one.